As I'm sure you've heard, the Federal Reserve, or the Fed, cut interest rates by 0.5% back on Wednesday, September the 18th, which is the first cut since the COVID-19 pandemic broke out back in 2020. The Fed pause, which is the period from the last rate increase to the first rate cut, lasted 423 days, which stands as the second longest pause on record. The S&P 500 gained 26% during this pause, which began back on July 27, 2023, and ended September 18th of 2024, and actually ranks as the best performance for the S&P 500 during a Fed pause. Now, the debate about whether the Fed was going to start with 0.25% or 0.5% was all the rage. What really matters most is how much the Fed will cut for the entire cycle and how lower rates will impact the economy. And honestly, whether the cycle started with a quarter or a half-point cut isn't nearly as important, because we're certainly going to see more cuts before the rate cycle ends. Now, we don't know, and honestly, the Fed doesn't know how much they're going to end up cutting. But if they are able to engineer a soft landing, which given the rally we've seen since the rate cut sure suggests the market thinks we're going to get that, then perhaps they end up stopping before they get to the 3% neutral rate. Now, right now, the upper band sits at 5%, which is down from 5.5%. So you can see there's another 200 basis points of cuts reflected right now with the expectations. Now, the Fed and most analysts think that neutral rate is around that 3% I referenced, but it could potentially be a bit higher. Either way, based off of the experience of 1995, this would set up favorable environment for stock investors. After we saw the initial cut in February of 1995, after an extended pause, the S&P rallied 18.7% over the next 12 months. 1995 is important because it's the closest comparison we have to what we feel like is going on right now. Now, you've probably also heard we have an election coming up in early November, and we're likely going to see some volatility in the markets leading up to this election. That would be very normal from a historical standpoint, and honestly to be expected. Also, given the rally that we've seen, Fed rate cut, it would be normal for the market to take a pause short term or even pull back some. As always, it's important to have an understanding of why the market is moving, but investment changes should be based on your overall plan and risk tolerance and not on short-term movements. So make sure to follow along for more updates. Thanks for following along.